Morning, morning, morning. Okay, good morning, everybody. 5:30. Let's get started. Yeah, as you all know, it's non-farm payrolls today. I'm doing a session. I'm going to be on at 2:45, by the way. I think it's all sent out to everybody. It's 3 o'clock start. I'll have to be just a little bit before. Yeah, and then again, we'll do the mechanics this morning. It's going to be a fairly quiet day, I think, this session, so we can spend some time going through the mechanics of it again, if you like, and going through, clearing up a few matters, etc. Yeah, until the non-farms come out and we get some direction going into the weekend. Just let these guys in. Yeah. Yeah, let's bring up the fundamentals again. Yeah, well, no, right. GBP, not too bad, slightly above expectation. 0.3% plus, expecting 0.1. What are we comparing with? It's pretty, well, we're all talking about growth, but there's not much growth there. But very little growth, and just a little bit better than very little growth, actually. It's not too bad. So, yeah. The 2-star, a little bit worse. Manufacturing, yeah, that's down a little bit more. I take your points on that one. Yeah, overall, it's not great. We mentioned many times about the UK. Its economy is well, struggling. Yeah. So these guys there. Okay, so anyway, that's out of the way, which is good. As I said, it's going to probably drift around a bit. As you can see, I've got up on the chart here, the VPNZD. Hello, Gerard. Yeah, that's not a bad one. A couple I looked at, Euro, sorry, AUD CAD, and this one. Which I quite like it. It's a bit, it's a bit of indecision there, but I tend to agree. I think maybe it's biased to my negativity about that specific currency. I still believe the overall economic area is better in it is in the UK. And it's quite high, I get that. But I think this is a stage where we call overvalued, or down here, undervalued. Okay, I do think there's going to be some downside here. If it tries to move up, the sellers come in. Let's try a shorter term one. I like it, Gerard, but I think maybe we should be a little bit cautious at the moment and just wait. I'm not talking about the non-farms now. I'm talking about generally speaking. I can see overall a bit of indecision there, but yeah, I do see some downside. Just try the weekly here. It's a pity it's too far away. I was hoping you might get something about this guy here. Yeah, it's too far away. If that little wick had been down there somewhere, I would have said we can go to the market, maybe a move down to here, we can get a original order, whatever down there. My worry is this guy here. It's a little bit far away. Probably a fundy spike. It's today, yeah. Probably a fundamental spike there, but still the spike is still there. A little bit cautious on that one. But overall, I have to say I like it. We can put a step up here. Apart from this spike, let's go back to this guy here. Can you see what I'm talking about there? Put it above there. That's only 70 odd pips. Clearly plenty of downside down here. Plenty, no problem there. What's a 50 now? Maybe I'm being a bit sort of overcautious at the moment, but I have to say I agree. I do like it. Anybody got more testosterone than me? What do you think? Yeah, agreed. When I talk about emotion, that's my emotion. A little bit. I need some moral support in this one, but I do agree with you. I see downside. See what I'm doing now? Look for confirmation to try and give it. Yeah, downside. We can't put the stop up here, it's too far away. We can put above this guy here, it's only 70 pips. And let's say emotional spike, I take your point. Really, I have to say I quite like it. Yeah. You see where I'm coming from, guys? I like it. Yeah. More I look at it, more I like it. Good morning, Dirk. Good morning, everyone. So sorry to just go straight into your right, but I have to say I like it. Let's have a look at it. Can go through, I've gone through, but you guys can look at it. But yeah, I support that. Morning, Mark. Going on to look at more depth, ask any questions on it. What do you think?
In 2020 and 2021, we did really reshape of the business model with a strong rationalization of retail and geographies. At the same time, we invested.
I think your Wi-Fi is a bit iffy there, Mr. Matomi. I didn't hear clearly what you were saying there. What do you think, guys? $80 a micro. Anybody else, or are you going to leave it? Because I don't want to stay here too long if we're going to leave it. Gerard likes it. Well, I support you already. Anybody else? Okay, fine. Anne-Marie doesn't. Okay. Nobody. Okay, fair enough. We'll leave that one, but we'll keep an eye on it and come back to it. Remember that figure you got in already? You can remind me later on, see how it's doing. Okay. Another one I looked at this morning is a AUD-CAD. I see a potential downside here. Let's look at the weekly. Halfway through the range on that, but still, I think you could get down to the bottom of that range. These 70 pips, not so good. Tell me much. I like it, but it seems a bit indecision at the moment. So yeah, I do like it, but I think it's a bit iffy at the moment. So that's the only one I came up with this morning, the strategy meeting we have locally. This one here, I didn't spot that one that I just mentioned there, or rather Harold mentioned there, but I have to say I do like it. Yeah. Well, as I say, I've been mentioning, selling the Swiss franc is not my idea of fun. This one actually turned out pretty bad, actually. You know, that didn't turn out too well. So yeah. And because it didn't do too well against the Japanese yen, that confirms the point that, yeah. Yeah, sell the rally, like I said. We didn't do a trade. If you did with you, yeah, we didn't do a trade this time. Can't see a share. Yeah, a lot of it is because you lost in it. It's got to be good. You try again. It's got to be good. Now it really is oversold. It's got to go long or whatever, or vice versa, obviously. And they do it. Always reluctant chase. I still think it could have come up a bit more, but yeah. Anyway, revenge trading, yeah. And the Nasdaq. Be a little bit careful the Nasdaq coming into the non-farms today, but we can certainly look at it. Yeah. Yeah, chickens rule, forget the tigers. Yeah. On the 30 minutes, I don't see any trade at all. In fact, came off a little bit more than I expected. As you know, I'm Silver Rally. I thought 12,000, maybe 12.1 would hold. I'm surprised it came off and broke it from that interest. But that's not really what I'm trying to get at. I think it should leave that alone. I wouldn't be getting too cute with it. If you think you can get a quick 100 pips from any particular direction, up or down, before 3:30, well, go for it. Good luck, etc. But I wouldn't be going that direction, no. Anyone see a trade on this one? Because for the record, I don't. Well, apart from the fundamentals, I totally agree with you there, Mark, but I won't be joining it now on a short. I think I'm going to do anyway at the moment. What I couldn't understand yesterday was how USD and indices were dropping together. Yeah, I wanted somebody to pick that up. It confused me as well. When I woke up early this morning, I could have got a bit early. Excuse me, I wake up fairly early. And that, have to say, that did confound me a little bit. I know exactly what you mean. And that did surprise me. Yeah. The dollar, let's go back on my other screen as I'm speaking. Where are we? Yeah, the dollar was on the hourly one, but going back a few hours. Yeah, the dollar was actually coming off, and yet the indices and yet the NAS did come off as well. That did surprise me. I thought we might sort of hover around the 12.2, 12.3, somewhere around that. When I woke up this morning, having looked at what the dollar was doing, but yeah, emotions, assuming you think of, because rationally speaking, I have to say, in all honesty, well spotted. That did confuse me a bit. I was actually hoping nobody would notice it, because they might ask me for an explanation. So since you asked, I don't know. Yeah, gold is behaving well. I still see downside on gold. 30-minute there. Let's do a bigger one. Yeah, I still see downside on gold, but again, I'm sorry, it's going to be boring. I would be getting cute with it. A gun against your head, would you be long or short? I would be short, but probably take the gun away from your head. I would leave it alone. Very few people learn up to that one. Yeah. So somebody called me up yesterday, and they without thinking, they got a buy and a long and a few open positions. So they realised that they're hedged because they've got as much buys as long. What do I do now? So I can't say get out of one, but it's just my feeling. You take whatever you want, but I'd rather be short than long. But I can't say that because it can. So anything can happen at the moment. I cannot even think to give any form of direction whatsoever. It did come off a bit. And then as soon as it came off, it got no direction, it bounced up again. I can't. I simply can't do that. And a good example, actually, Mark brought up there, which confused me as I spotted, was when you get that irrationality. If the dollar strengthens, if the yields on the 10-year note go up, you should see a fall in. You should see a fall in the shares. You should see a fall in the indices. But it didn't happen. That to me is, I think, either high-speed trading or emotional trading, which means the rationale is going up. The only difference with this to gambling is gambling is pure emotion, flicking a coin, hoping for the best. This is supposed to be a learning curve to exercise some form of rationality in that particular trading strategy. When that's taken out of the equation, best thing is to back off. It's like having an argument with your partner. Once they go into the emotional area and you do not understand or empathize that specific emotion, the last thing you do is try and rationalize, you'll just make it worse. Just try and sort of, I don't know, how to empathize. Try and hopefully somehow support, I suppose, the best way to put it. But don't offer advice on that area, because it's emotions completely, utterly taking control. And I think that's probably where it is at the moment. Yeah, I do. I've just come to that point now. It's a pretty simplistic form of strategy. Maybe I've got used to it now, so I'm sort of maybe back to the chain, got a bit of a rut myself. But I'm not sure really, for me personally, it really matters whether, as you see, quite the golden, whether the 50, we ignore the 100 for the moment, or it has its uses, whether that is above that or vice versa. I suppose, in a way, the longer term area, if that was above, that's 200 compared to 50, would maybe indicate a little bit more weakness than the other way around. That's just sort of mathematical common sense, if you like. But I don't take a hell of a lot into account. I say, let's pretend this is a brown, and let's pretend this is a blue, and it's up here, and I'll look at gold. No, gold probably the wrong way to put it. But let's say it was the pound against a CHF or something like that, and this was the blue and that was the brown is down here. I would look to short it. If it was up here, I'd be wary of it because of those reasons. But maybe I'm waffling a little bit. I'm trying to think of a way to put it across that makes sense. I don't think it makes a hell of a lot of difference personally. I'm not sure I'm 100% facts on that one. But if this is blue and brown reverse, in theory, without having to look at the particular currencies or the gold in this case, the strength of the dollar or whatever, taking all that out of account, if the gold came back and touched that one and went up, purely technical on its own, I would look to buy it. If this was a brown and this is a blue, I look to buy it. As it is at the moment, it's a blue and a brown, still do the same, look to buy it. So really take a hell of a lot of notice of that. I just look at overwhelmingly, it looks down right down here. There's more sellers than buyers, probably even Stephen above that, more buyers than sellers, till you get to what considered, well, in my mind or in our own minds or overall minds, it's getting a little bit stretched. Your 2 million rand house in that area, it's starting to go up for whatever reason. That's great stuff. But when you get to 3 million, maybe it's a bit overvalued, or it's dropped now because people perceive the value of the area is not so good. It drops down from 2 million. But once it gets to 1 million, hang on a minute, I think it's going to be a bit undervalued. So that's when you'd buy it when it's an undervalued, or sell it as overvalued, even though it could be the buy or sell zone. About the best way I could actually put it forward. But can't really say that I make much differential on that. You with me, Gerard? Yeah. I suppose the best way is saying, you know, the more you study and the more intelligent you are, the more you look for complicating it. You know, you study 5-6 years, maybe more probably, to get your master in psychology. Massive amount of that is just going into Freud, or what's the other famous guy, you know, a few guys getting well read, etc. But I'm telling you, right, basically, I'm telling you right now, it's fear and greed. That's the big tussle. We can go all into going back to evolution, how it worked, how religion or whatever. These are all details that makes you an educated person. But the actual bottom line is the fear and the greed. And that's the tussle we deal with in everything in life, including trading. Two fundamentals, yeah, exactly. And the give and the, and saying the give and the take sort of thing. Nobody wants to give, everyone wants to take. Everybody wants, nobody wants to give. The problem is, hate to say it, it's going to balance out somewhere along the line. Some sort of fair trade-off. Short term, probably the 50. I'll just probably the 50. Short term, but again, I can put up an argument for the more stability of the slightly longer term, the 200. But I would say from a short term perspective, probably the 50. Oh, sorry. Yeah, talking about moving everything. The non-farm, the jobs report. Unemployment moves around basically. This is the best way to put this. Nothing best way to put it. Not as unimportant as employment can go up or down slightly, but the jobs are there. Okay, the jobs are there. Whether they can be filled or not depends on whether the skills are available at the price the employer can afford or wants to pay, or whether the people who are looking for the financial income, they're looking for a job. They want obviously money because they can't survive without it. But have they got enough input to actually take that job with a lack of skill, etc.? In other words, there's probably just over 10, about 10.5% job requirements, but something like half of that can be filled. But there's unemployment simply because a lot of those guys out there are unemployed, haven't got the skills or whatever to fulfill that particular job requirement. So it will occur where they will allow in people from outside, whether the expats or whatever, apply who can fill it in, because the guys locally can't do it. So from that point of view, I'm sort of meandering a long way. Has a bit of, can have, it's outrageous, can have a little bit of a whiplash effect on the non-farms, but the jobs report is still the bigger, because that indicates whether the economy is going to go forward with more inflation or lack of it. So not very well put, but anyway, yeah, the jobs report is more important. It might get there, Tony. It might get there. It'll be fundamentally driven to get there. If the fundamentals don't drive it there, I don't see that happening at the moment. On gold, I mean. Yeah. Trying to think of where to put this. I mean, for instance, in this country, I think between the 18 and 24-year-olds, 50% unemployment rate. There's a lot of jobs out there. So why are they unemployed? That's the major point. I mean, not that particular individual, but such an overwhelming percentage, because they don't have the basic skills to fulfill those job openings. There's a hell of a lot of expats working over here at great cost, I might add, because they have those specific skills. Yeah. As they say, you know, somebody come from outside to take my job away. No, you wouldn't have the job whether they came or not. You don't have that specific skill. Okay. Okay. Ooh, someone's got some courage here. Let's have a look at it. Technically speaking, I couldn't agree more. Couldn't agree more, Tembi. Couldn't agree more. So why do you think I'm a little bit hesitant? First of all, I'll tell you, just in case, I'll tell you why I'm hesitant. We've discussed the jobs report, that's a major factor. The other aspect is you're buying the dollar. If you're going to buy the dollar on the long, what you're selling, you're selling the Swiss franc. That makes me nervous for two reasons on that. Technically, yes, but on a fundamental basis, the jobs report will affect the dollar, and you might be right in hindsight, but we don't know now. And to do that, I'd rather, if I'm going to buy the dollar, I'd rather buy it against a weaker currency, because I don't particularly want to sell the Swiss franc. I'd rather look at USD or the GBP, because that's the base currency in this case. Probably the weakest currency at the moment is the pound. Let's go back to the pound. I'd rather be looking to buy the dollar against the pound. In other words, clearly this would be a sell because that's the base currency. But again, look how far it came off. We've got that trade right. This is a bit of a recovery. I think it's setting itself up beautifully for another short. Do I want to do it now? I'll be honest, I've mentioned many times, I'm worried about what will happen. Not because just the figures, that's an unknown, is the reaction to those figures. It could be understated, it could be overstated. You know, I mean, it could be a disappointing reaction, it could be a big reaction. That emotional aspect of that interpretation worldwide, I have as much idea as that when, who asked the question, Tembi, as much idea as that as what mood you're going to be in when you wake up tomorrow morning. And I'm going to ask you honestly, Tembi, I bet you yourself don't know. The sun is shining, I'm in a bad mood. It's pouring rain, had a fan argument, I'm in a good mood. Why is that? It's an emotional thing. But yeah, you know, to get the odds inside, you're going to have some sort of rationality, and I'm reluctant to sell the Swiss franc. So if you want to buy that dollar, never mind the technicals, rather buy it against something the other side of the coin that you want to sell. You got it, yeah. Now, you think I go on about this, I've mentioned many times in the past, it's been a long time. I'd say 5, 6, 7, 8 years ago, maybe it's, I don't know, but a few years ago, probably about 80% technical analysis, 20% fundamental. What has changed all that now is the fact we all have smartphones. I mentioned this before, I want to reiterate it. Twice as many people have smartphones the entire human population just over 100 years ago. Around about the turn of the 20th century, going to the 1900s, there's plus minus just over 1 billion people. 2 billion people, not exactly, around about, have smartphones. Smartphones are instant, and we're emotional, so we have instant areas of information flow. And that information flow is reacted to on an emotional basis. And that's why the fundamental understanding is so much, the psychology of it has become such a major part of what's going on. You need to know what the double top is, you need what the head and shoulders are, you need to map the trend lines, we get all that. But you have to be aware of that emotional fundamental basis behind it. Example, for some reason, a fundamental came through right up here, and this is where the GBP CHF is, for argument's sake. Knowing that the pound overall fundamentally is not in great shape. The Swiss franc, as I mentioned many times, the Nomes of Zurich, etc., is in pretty good shape. So that being might momentarily, maybe over a day, I don't know, jump up there. Technically speaking, that's a buy. I would be nervous of that. That's what I'm trying to get across. And that's why one needs to understand the basic economy, basic economies and macroeconomics, what fancy word you want to use, behind those situations around the world. The technical analysis, you need, that's one thing we can learn, but on its own, it's not enough. You have to learn, take into account what's happening worldwide, not to, you know, screwing who or whatever, but the basic, not even depth, basic fundamentals, what's happening worldwide, the basic economy area, and basically, and fully understanding the fear and greed emotional aspect, because you feel it, so does everybody else, and try to click into that emotional understanding. What's the first thing we all do when we come into this particular business? For most people, it's completely outside the box, outside the comfort zone. Car driving, it's in. House buying, boy meets girl, or whatever, it's within the comfort zone. This is outside. So because it's outside, it means we have fear coming in. And that's why you've got to understand that when you're dealing with that sort of situation psychologically, so you can empathize them to try and help them to use analogies, saying it's the same principle of driving a car or same principle of waking up in the morning. It's the same emotional, it's just the difference is this is outside the box to most. But if you can put it in that same sort of analogy, then you can relate to it and it becomes more clear understanding. That's why I use analogies all the time, it's something you're familiar with. Once you get that, then you'll sort of realize the same aspect of just about everything. That's what I'm trying to say. Please explain the strength of currency, why is dollar to pound? Pound is weak. Please explain the strength of currency, why is dollar to pound? Buyers and sellers, emotional buyers and sellers moving it up. Let's go back to GBP USD. We've got it up here. All right. Gerard, well, inform everybody here, Gerard is a human being. So when I say that, they've got those fear and greed I just mentioned there. So Gerard, very clever guy, he sold, he can normally pick a top, but he's particularly clever, he sold here, right? Now it's come right down. What's going through as it's coming off? What's going through Gerard's mind? He's winning. Why is he not happy? He's frightened because somebody's going to take it away from him. He's frightened, but it's still winning, but he can't stand the stress. Why can't you stand the stress and handle the stress of winning? Because the back of the mind, if it goes right, it's got to go wrong. Just things are going well, it's going to go wrong. We all know that. And it can't keep going to your fright. So we get out here, for instance, because you can't handle that winning because it's terrified someone's going to take it away from you and it's going to jump up again. So it comes down a little bit further. But he's really tough. He's really experienced. It's coming off, it's coming off, it's coming off until he can't handle it any longer. So he's going to close it. He's going to close it. As he closes it, it moves up, short covering, okay? Then other people will see it go up, mainly retail trade or more emotional and practical, will start buying into it because they think, oh, it's low now, I'll buy into it. That adds to the momentum. And then the high-speed traders, the other guys, the big boys will say, let's just push this momentum a bit farther. They'll start putting bigger position and pushing it up. They've ignored that area there. they pushed it up for those reasons there. And then we take a step back and say, right, the value there is now getting completely misplaced. I think I'm going to take it now. It doesn't make a lot of sense. Get out. Other guys will get out. You get this coming down there, and then other guys will say, yes, this is interesting. But it is a bit overvalued. I'm more comfortable weeks the pound and dollar. This, I've waited for a month. I haven't traded. This looks like a spectacular setup. I'm going to go in boots and all and bring it back down again. All that emotional moving around in one's head. See what I'm saying, Gerard? I've listened to 702 quite a lot, actually, but about a year ago or so. And there's a clinical psychologist on there. And she turned around. Everyone should spend a little bit of time with introspection, looking within and trying to understand yourself. And you'll find if you do that, you probably find with a few cultural differences, you're pretty similar to about everybody else. And it's this tussle between the fear and greed, with the fear being by far the most powerful emotion. And that's what moves in the short term of those markets. That's why we hang on to the reds, because we want it to come right. We can't handle it. We don't want to take it. We don't want to take the loss. We hang on to it. It comes right. We get out the blue very quickly in case it's taken away from us. With the fear of winning and the fear of accepting the loss. That's what happens. And that's the overwhelming reason why not just this, most people basically battle in life for those reasons. And this is a basic fundamental in every degree. Psychology affects everyone. I don't care where you come from, who you are, what gender you are, what sexual orientation, what religion, what race or whatever. It's a basic human instinct. And once you won't build total control of it, once you get to understand it, you read up about it or whatever, you'll understand that's the irrationality that drives us, and that's why we have stop losses, etc. And most of us try to grasp onto some sort of rationality behind it. There, of course, is. We can think we're humans, but those animal instinct. Make sense? It doesn't read up about it or whatever. Freud, what's the other guy's name? The famous one, was that? AUD, NZD, CHF for a while. You mean you're selling the Swiss franc, Tembi? Just remember that before we look at it. It could be right. I'm just saying, bear that in mind. Now, let's put it on a weekly. Now, here's a good example I've just been talking about, or ranting on about, or waffling on about, whatever you want to put it, is this is for a long. Now, I'm going to turn around. Why do you think you buy this, Tembi, or anybody else? What is the strategy or the thinking or the rationality by finance? Not saying you're wrong, you might be 100% right. I'm just trying to get to learn about the psychology of trading. What makes you think this is good for a long? Whether you're right or wrong, subsequently is not the point. Trying to ascertain what is the motivation for somebody to say, I would buy this, as opposed to selling it. Because that's quite frank. I'm going to bring this up. I'm spending a bit of time if you don't mind. I don't want to bore you guys. Because actually, in the long run, this is quite a vital question I came up with. Yes, we get the downtrend, clearly below that, exactly. Downtrend, no problem there. Again, there's nothing particularly fundamentally sort of bend the wheel on that one. More to the point, Tembi said, let's look at this to buy. What is the reason? Would Tembi or anybody, I'm glad he put this up because it's so important. That's why this interaction is so vital. What I'm trying to get across this concept, why would Tembi decide he would like to buy that? Any idea? Include yourself. For scalping, okay? Any comments on that? What would motivate you to buy this? So I'll give the answer in a minute. I just want to see how the responses are if you're getting this concept.
We check a daily, maybe a daily time frame.
My help, sorry. Thank you, Ken. Brilliant. Thanks, Ken. Sorry, I thought I was on the weekly. Thank you, mate. Barney and Ken, I need you. As it turns out, I think where I'm going with probably sticks with the same. I thought when you said that, Ken, I'm going to trip myself up on that because I was on the weekly. But I've done the 4 daily and weekly. Why would you think there's a buy? You see where I'm coming from? I can explain, but rather if you can see what I'm getting at. It comes back, okay. It comes back to the picture there. It's come off so much like a pound dollar that it's a situation where it is so oversold or so undervalued that there might be some response to move back up again to get some sort of parity of psychological value. But more important, which worries me a little bit more than that, is the fact that it is low. It might jump up because of it, and you might probably be right. What I want you to say is just because it's low on its own is not good enough. I personally think that was pretty low. Let's go back in time. What are we on our daily yet? Go back 3 days. That was pretty low. What happens? We thought that's low. My strategy is low. And look at this low here. I'm going to buy it. That's the only way I've looked at it. Nothing else. Not with NZD, CHF, whether 200 or 50 day or the Bollinger Band or whatever it happens to be. It's pretty low here, isn't it? Can you see that? Forget these candles here. It's pretty low. On that, I think it's worth a buy. Look what happened there. You get my point. That's why you have to say, I see that, but you've got to back it up with a couple of other areas. Look at the fundamental side of the currency dealing with until you see some momentum. And this way, you don't want to be a pioneer. You want to see the bigger boys to follow, as I say, the smart money to see if the momentum is starting to recover. Then you can climb on board for taking back up to maybe these levels and going against the trend for hopefully some sort of movement back up, like we looked at GBP USD. It was such a stage, that value of that 2 million, it's still got a value. It might be overvalued 2 million, but 1 million's been undervalued. At 3 million, that 2 million house now got a 3 million, it's getting overvalued and people getting nervous. You get the idea. That's the psychology I'm trying to get across. So from that point of view, no, I wouldn't be buying it. Now, that's why we look at the shorter term there. It did get a recovery. That's the reason is, again, a lot of guys have gone in for that reason. Tempe's put out. I'm not saying you're wrong. I'm just trying to understand the psychology behind it. Yeah, they've bounced a bit, but is it a strong enough area to fulfill a particular trading strategy to make the risk worth it? And it doesn't seem to be happening at the time. If you got in there and there, it turns out you probably would have done. Oh, no, hang on. Still 1 hour. Yeah, well, we'll use the 1 hour, speak to that. You see, that is a 20 pip move. You got 4 or 5 pip costs. There's probably slightly less, but yeah, about 5 pip costs out of that 20 odd. And you got the risk. You can't pick a bottom. It's not worth it. You see where I'm coming from? So from a point of view of a buy here, and don't say afterwards in retrospect, it shoots up there, I was wrong. I can only go what I'm seeing at the moment. I wouldn't be buying it. I would look maybe if we can get some consolidation here, maybe sell it down. But at the moment, I wouldn't touch it. As Ken points out, it's very much in a weak area. It might not yet have got to the 2 million house being 1 million. You see where I'm going with the psychology aspect? That's assuming it's still weak.
Can I ask something, Roger?
Go for it.
Yes, can you go back to the 1 hour time frame? I just want to ask something just to make sure I get you.
Okay.
I just want to know, you see that high there by the price 0.56970? The high, that high?
0.57. Put it not 0.57, round about there.
I just want to ask that if it breaks that high, is it not an indication that it's going up?
Yeah. Right. Yeah. Now, that's the point I'm trying to make about momentum. If that breaks to the upside, it means the buyers are coming in. It's not just short covering. Remember when you got out the pound dollar, you exit on your short by buying. That's short covering. Are you with me? So we don't know at this stage how much is short covering or how many buyers are in there. If this is taken out, then it's perceived worldwide, for want of a better way, that this is undervalued, okay? And therefore it's attracting buyers, then you can clamber aboard.
Okay.
Make sense?
All right, I hear you. Thanks.
Yeah, you hear me, good. Does everybody hear what Tembi said and what I'm coming from? This movement here, I'm not convinced yet that it's just short covering. I'm not convinced yet it's attracting a lot of buyers. Once it attracts the buyers, don't be a pioneer, be a sheep, follow the buyers. Don't you Trump preempt it. Okay, Dirk, done. Because there's not many trades going out to non-farm, and that's why I want to discuss the psychology of trading, because I'm telling you right now, it's personal experience. I forgot a lot of the stuff I used to know on the technical side of it. But I missed one major point, the psychology. The psychology, not just in trading, your personal life, everything. Will you be good at handling whatever you want? Not necessarily so. You'll still make a mistake, as sure as I do. But the overall picture, understanding human, basic, not years of degree, basic psychology. Love, greed, power, fear, those sort of aspects. Okay. And then if you feel that, trust me, the guy on the other side of the globe feels the same thing. It's in our genomes. And once you can sort of see that and understand that basic psychology of trading, a lot of areas of life as well as trading will start to come clearer. And it's not original, this. I saw it in an article once, and it just resonated so powerfully. And that's why I carry all these stuff. I have a chart full of stuff. I have it down to those basic symbols, trying to get into the head where the fear and greed's coming in. Okay, Peter. You know what I'm saying? We all talk, oh yeah, all the same. Yeah, well, actually, I hate to say it, my friend, yes, we are. I'm going to open up Q3, yeah. Yeah. I said quite at start a little bit earlier, like I mentioned before. So if you guys come a bit late, we've still got time without me getting, quite frankly, addled, trying to explain the mechanics. And then they're not getting it, so they do it again or whatever. And then it's getting pretty close to the time. I want to have all that understanding out of the way so we can relax and wait and be on it when the information comes out. And again, psychologically, we're all going with a want. We don't know. We don't know. We all want to say, you know, in 3 hours, you go from Durban to, Joburg to Durban, 3 hours in Harrismith, 6 hours in Durban. In life and trading, it's not necessarily quite as straightforward as that. So we've no idea. So because we have no idea, what we're going to do is try to make use of that no idea by doing that straddle trade and being on it. Okay. Yeah, I just mentioned that yesterday, or the day before, whenever it was. Oh, hang on. To be honest, I have to put my hand up. I'm going to be honest with you guys. I go through in the morning and I went through all the currencies. I'll get emotional bias, non-farms day, so maybe didn't go as professional I should, and the Brent slipped under the sodding radar. I'm being honest with you, Harold. Thank you. Again, I mentioned before, I'll say it again. I need you guys. I hope you need me, but sure as hell I know I need you guys. You'll like it. Okay, right. That did slip under the radar, like the GBP CHF the other day or whatever it was, somewhere on the radar. US dollar Swiss franc, eh? Sorry, CHF JPY, that definitely slipped under the radar. Well, not from my point of view, from everyone else's point of view, they missed that trade. I'll get one back on you guys there. Okay, yeah, agreed. If the non-farms works out well for the dollar strength, they might get some more pullback on oil, like I mentioned before, because oil is measured in dollars and most people are on currencies other than the dollar. So stronger dollar means they're going to pay more from their specific currency. That apart, I sell like it. So you're going to learn to eat a bit of humble pie. Don't get too ahead of yourself. And I should have spotted it. Thank you. You see what I'm about to open my mouth? We said, Brent, you know, you see my point. I was getting nearly, thank goodness, I checked first. Got ahead of myself. Started giving an appraisal of something which is not there. And then that human condition we all have. Thank you. Yeah, I like it. Look at that support, 80.15. It's only what, 30 cents away. Let's do the squat. Let's have a look at the weekly. That's going to tell me much. I can see there's no big buyers coming in, but not to worry about that for the moment. Well, a few of the four, I can see a bit clearer. 1 hour holding. Not telling me a hell of a lot, but totally see the vision. Let's put a line in the sand here. Remember, all the technicals, technical is about what are the buyers and sellers doing. Never mind all the fancy indicators. They can't predict the future. All you know is by looking at the candle and the situation on there is what the buyers and sellers are doing. At the moment, clearly, the pullback is the sellers in control. Where's it going to get to the stage where it's undervalued? Now, let's go to the next step I mentioned before. You've got a business, all right? You want to charge, you're in the widget business. Your cost to produce that widget is 25 Rand. So you know you've got to be above 25 Rand, including that 25 cost is as your rent, the people you employ, and all the rest of it. So if you sell for 25 Rand, you don't have any money, we don't. What you want to do is you want to make a profit. No kidding, obviously. But however, when it comes in there, you want to now sell for, let's say, 40 Rand. No, you don't want it. That's one way of putting it. So you think, what will the market take 40? What you want to do is sell it for 500 Rand, obviously. Like the Cayman drugs area, massively profitable. But a drug addict will pay anything for it. You're not in the drug business, you're in the widget business. So it gets to the stage, what I'm waffling on about here, to try and get the concept psychologically. You want to sell it at a maximum price. The buyer wants to buy it at the minimum, and that's where the fair trade-off area. Now, coming back to this area here, the producer doesn't want to bankrupt the buyer, then they don't have a business. But the producer does not want to go into a loss and they can't pay their own bills. Now, the Saudis have very little costs, well, they have little costs, shall we say, and they have spent a heck of a lot of money in some sort of infrastructure. But even so, they're not totally dependent on it, where a lot of countries are dependent on, let's say, $90 a barrel, because they went up to 90 and they did more borrowing, etc. on that basis. So if it comes down much more, the likelihood of the producer starting to close the supply, close the tap, as we call it, is likely to kick in. If it gets too high, they're worried we don't want to bankrupt the buyer because then we don't have a business. They'll start opening up the supply to bring the supply down to bring the price back down again. For those reasons, it's a balance between the two. I'm sorry I'm going into all this detail, but I think it's important to get where I'm coming from to understand. So do I think it's going to go up from there? Absolutely, yes, I do. Now, can I tackle that? Do we want to wait till it gets 40 cents below that and fear missing out the trade? $2, maybe yes. 40 cents, no. So yes, I agree with you. We're going to put the stop down here. That's only $2. What a pleasure. Let's put it down here. $3. Under the $4 I usually do my weekly analysis is where I usually look for a stop. And even below those guys, we still haven't reached the $4 yet. Is it likely to hold at 77? Unlikely. So what we can do, have we got enough upside to give a wider stop? This is $3. Try and aim here. Between $4, try to aim here. I would like to base it maybe on these levels here. That's about $6. So let's make it a little bit less. Take it down here. We don't want to get too cute. We're going to aim at 86 because we got there last time. There's no reason why we shouldn't again. We're going to go to about $5.40. We're going to be looking about a $3 stop. Where's the $3 stop going to come in? So you follow my arithmetic. Around, can we do it? just a little bit below that, prefer it. So we put a line in the sand here, just come back to it. We're going to look for something off the top of my head as I'm speaking, excuse me. $3, so I'm going to look at least $5. Where's $5 going to take me? That's fine. Are you retired or something here? I seem to come up with stuff. You spend a lot of time on this. Where are we? We'll try that. 86. We'll stick with the 86. So make it 77. Make it 77.30. There we go. Yeah, I like it. Well, I'm pissed off at you, Gerard. If you're not doing this full time, doing other stuff as well, how do you think that makes me feel? No, it's my Tommy way roundabout way of saying to embarrassment, saying I like it. Well spotted. I like it, guys. I like it very much. Don't care what you say. I'm going to put this out there. Don't attempt fate, which means I'm just about to do just that. Of the last 6 or 7 trades, I've only had one baddie on the Brent. Yeah, I have to say, the only thing that's stopped me a bit more enthusiastic about it is called Murphy's Law. This is an absolute guaranteed no-brainer, brilliant one. I would then suggest you'll go short. You know what I'm saying? Martin knows exactly what I mean. Actually, I'm not going to get Mark. Got to write that down. Just remind me of something. I'll come to it in a minute. You see what I mean in a moment. Yeah, the gold man is Maris, yeah. See, I've got a degree in gold, but I've been practicing doing something else for the last 10 years. Maris has been doing gold with no degree, no, not even matriculate, he's doing the last 3 months. I'll defer to Maris when it comes to that. You know what I mean? It's the practice. Okay. Okay. Right. I presume since your idea, Gerard, you're going to Etienne is the Brent. That's all true. That's remind that. Yeah, he used to more WTI more than Brent, but yeah, that's also true. Okay, how many guys want this one? I was going to say, if you said no, I'm going to wait, Gerard. I say you cowardly. Who else likes it? Tomby likes it. Anybody else? Chicken, yeah. Okay, it's more than a couple of people. That's fine. Good stuff, Vicky. Put that down. What is it now? 50. Put 50. Maybe 50. Remember what I said? If it's moving, could come back a bit. To be fair, it's not the quickest move at the moment, but if it is moving, get your entry in with the correct volume and put your SL and TP in afterwards. You're going to be losing profit because you're fiddling around from the SL and TP in. You know what they are. You put in after you entered it. Doesn't always work that way. Sometimes you wish you had got the better price by faffing around, but you get the point. SL 7730. What is it? $60 a micro. Okay. Oh, you mean the price trapping, as in the straddle trade I mentioned? Okay. Whilst you'll do that, we can go into that a little bit more. Because, well, hang on, someone's mentioned earlier on about Tommy. Beg your pardon, I forgot that. Being so carried away. Yeah, well, you missed it, Mark. CHFJP1 I'm going back. Yeah. What didn't Tommy came out with a couple of others, and the AUDCHF. Knock that off. AUDCHF. Yeah, again, I think I'll hold back on that. It's broken through the support area. Is it a stage where it's undervalued? Well, I don't see much indication to confirm that against the Swiss franc, as I mentioned. I will be going along with it. Okay, as we discussed earlier on, GBPCR, well, no doubt about it. I didn't miss it though. Yeah, shit, matter sale. Maybe not. I don't go along with it, by the way. I want to sell it. It's gone broken back down for that support area. Let's put a line in to make it a bit clearer. Round about that area where it is now. You can see that. It's gone back, tested it, and it's starting to come off. Let's talk about 4 hour. 4 hours defending it. See what I mean on the shorter term one? Bit of indecision on the hourly one, which means I'm going to be indecisive. It's not a decent enough confirmation to sell it. So I think I'm going to miss it, which I did last time, or we all did last time, to be honest. But I'm looking to sell it. I think I like to have a bit more confirmation. But this is another one I want to sell, not buy, sell it. This is the weaker against the stronger. This is a light with. You want to get a decent value. And I still think there's a few short covering guys that are still waiting to get out to push it up a bit before we go in. And once we get the sellers, we've got rid of the short covering bounce, and the sellers are now joining the party, which is the confirmation, like we mentioned, Tembi, when you spoke just now. But then we want to join the sellers on the way back down again. It's not happened as yet. Keep an eye on it. This one, yeah, but or rally a bit if you're going short. Might have a rally but better price, or let's wait for the sellers to come in to join the party. Okay. Okay. But keep an eye on that, guys. Okay, before we go to straddle trade again, which you want to do, if you don't want camps, quite a few new guys in here, so it might be important we do it again. I just want to. We talked about undervalued. You know where I'm going with this? Can you guess? Can you guess, Mark? Hint. I think it's got to have some value somewhere. There you are. Horror and shock. It has to have some value. I'm sorry. I think you bought in the wrong area, your house, Mr. Smith. But Mr. Jones, not Tom Harris, not Mr. Smith, Mr. Jones. But your house is still not worth anything. If it's for free, the guys lying on the street will move in. You know what I'm saying? We have some sort of value somewhere. I think this is getting close to saying the value buyers are going to say this is really, really, really low. We're going to start bargain hunting. I think NGAS is getting to the stage where bargain hunting is going to come in. Now I know Shora and Horror and Shock. It's called a spoonerism, by the way, like Friar Tuck, if you know what I'm saying. Yeah. So I think that's coming down to a situation where look at that consolidation. It could come back to $2. I don't know, whatever. But I personally think let's open our mind, despite what happened in the past. I think it's got to have some value somewhere. It costs money to produce it, so it cannot be free. It has to have some value, and I think it's getting to that situation now. Is that right? I didn't know that. Okay. I mean, Freeport in the Bahamas. Anyway, whatever. Mind you, I only said that. When was this? Only a couple of years, 3 years ago, it turns out. Was right down here. Wow. Glad I checked there. Can't believe it. Practically giving me away for food. I'm going to stick with it. Okay, well, Freeport. I know the Freeport is it well, port actually, obviously the port in the Bahamas. Well, it's not part of the States. They have the Bahamian dollar there rather than the US, but both countries are intermingled, if you know what I'm saying. Then a Bahamian dollar, you got dollars in your pocket. But anyway, I just don't like this guy here. If this didn't exist, I would say, hang on a minute, guys. Okay. 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 Well, what were we saying? Thanks. Okay. Those liquid natural gas carriers cost a fortune because they're going to be carried incredibly dangerous as well. The security aspect of forget all tankers. Believe me, Spartan set it off, despite the safety aspect. They've got to be kept at great cost at some, I can't remember, but not quite absolute zero, but very, very cold temperatures to keep it liquid. And the cost involved in those things is hectic. And so, again, if you're going to do the stuff, why would you invest in that unless you get some return? So you've got to still sell the product. I hear your point. Maybe we just sit aside. It's not much happening at the moment, but I think, you know, maybe $2, who knows? But I think it's getting to a stage where, as I mentioned earlier on, it's going to be undervalued. We can start bottom picking and go back to our friend NGAS. And it might suddenly, when people catch onto that bargain, they'll like, you know, like cryptos, they start buying like mad because they want to make a quick buck, fear of missing out. And we should get quite a decent run on it. Keep an eye on it, guys. Remind me. We don't want to be, this is where the pioneer comes in. It's like buying in the CBD of Joburg. Everyone wants to buy in Morningside, but they don't want to buy in Joburg. Guys who do might have to wait for a while when it takes off. Their perspective will be very, very good indeed. I'm thinking a little bit there might have a possibility of getting near the bottom where we can start being on board. It might take a couple of few days, maybe a week or something like that. So don't overdo it. But if you can afford, you've got enough free margin, hang on. Because I think if it does actually wake up, it's a little bit undervalued, you might get a big jump. That's what I'm thinking anyway. But anyway, good for fundamental backup. Right, I just come back to the emotional talk here. Port fundamentals, Mark, thank you. Yes, absolutely. Well, there you are. Have you seen that? I've never seen it, I've heard of it, never seen it. But you can imagine. We're talking not quite nuclear, but yeah, it is. If those things go, it's a big deal. Yeah. Okay, right. Just come back to it, Marvin. Thanks very much for joining in. I think just starting here, and we're talking about emotions earlier on. Hi guys, what are best trades can I place first? Now, there is emotion talking. Every trade we come up with, we think it's a good one. I'm not going to say I've got 3 trades here. One's pretty good. The other one not that great. One of them's not very good at all. No. If we put out a trade, we think it's going to be good. So if, in retrospect, after the trade's reacted, like the GBP USD with a bit of helpful power the other day, that was a great trade, but I did not know that beforehand. If I did, I wouldn't have gone in 1, I would have gone in 100 and I mortgaged my house, put it in. You get what I'm saying? So we put out what we can, Marvin, but there's whether it actually turns out well or not, we don't know, because the market responds to the millions of people trading with different emotions, different strategies, different amounts of money, different cultures worldwide, might not quite react to the same way as I would like them to react to it. You see what I'm getting at. But if you can start with Brent. Okay, we did a Brent, someone's doing the mode, we'll go back to it. If here's your first trade, just remember, I hope you got your position size calculator, because you need to get the volumes right to sort where your head is. Okay, so let's go back to this one. Unless you're already in it, you can try this one to start with. 77. 0.3 and 86. It's moved a little bit, but not that much. The ship hadn't sold yet, is what I'm saying. Yeah, it's fell a little bit. Now we've got about 1.7, that's 1.6 risk reward. It's still a little bit, but I still think it's doable. And you can even raise the TP up if you like to 86.50 to make it a little bit better risk reward. No problem there. I think the stock could stay where it is. Now, what it says there, guys, 60 bucks a micro. I don't know what you should go in on that. You've got to know, number one, what's your account? What percentage you're prepared to risk? In other words, what can you afford to lose? And on the top of it, you've got to have your head right. You don't want to jump in and say, oh, I'm so convinced of this, I'll do it. It works out badly. Now your head's stuffed up. What can you afford to lose? Can you afford 60 bucks? No, that's a bit ridiculous. Can I afford 120? I want to make some money, because the lower you go, the smaller you're going to get in return, if you like. So you turn out and say, can I afford 180? I go 0.03. But that one you can start with. I do quite like it. In fact, most people would do. Okay, Marvin, so there you are. You want to do that one? There you are. Work out your risk. There's the stop, the TP, and place the order. And if anybody turns around to the broker and says, well, I don't know how to place an order, can you help me? Yes, I can. Go to platform trading. My response is trying to get them decent trades. Your responsibility is to know how to place the trade. It's not mine, that's yours. Okay. And I've got another company's platform trade, but we discussed them all in this meeting. Most brokers out there expect you've done that. In fact, I know that for a fact. Don't be nasty, yeah, but one of the bigger brokers, I won't mention the name, said if you don't know how to place an order, maybe you should have a rethink about going into this business, because that's the easy part. Okay. All right. Okay. Any trades you want to look at, or what's the time? 20 minutes to go. I don't got any more trades. Stop me if you have one. We'll look at it. I just want to quickly go prepare some of the guys there for the non-farms coming up later on this afternoon. Number one, how to put this? If you haven't got Tom in your account or a demo account, or you only got a few $100 in your account, it's not really going to be for you. So that's why it's not going to be sent out to those guys. If you want, you can. But let's just go through the mechanics of it. I just want to make sure anybody who joined this afternoon understands the mechanics, because I'll go through it again, but it depends on the time involved, whether because I've got to stop. You know what I mean? It's getting close to the 3:30 mark. Okay, Mark, I know you know the score. It's not a problem. Footsie, okay. You want to enter now? I wouldn't. Too much coming up in what's that? 5 hours time. Too much coming up. Remember, not exactly. They tend to chase the Americans. If the Americans come off, that will come off. If the Americans shoot up, that will go up. But I wouldn't enter a trade now on that one, though. Buy or sell it. If you like indices, go to the micro, trade the NAS. It has to have your cake and eat it. You can go small, medium, or big. It covers everything. And it leads, and it's quick, and it moves. Why would you want to do the FTSE? The only reason you might, because you couldn't afford the NASDAQ. Now you can with the micro. Why bother the S&P and why bother with it? Do the NAS. That's you got it. Why not just concentrate on the NAS basically? Okay. If you want to do the NAS or anyone, you can do the straddle on any of them. I'm suggesting euro dollar because most people are familiar with it. It is a dollar as well because you need to have some form of dollar in it. With a GBP CHF, it's not dollar. You've got to have a dollar in it. So and also the costs are very small. So about just over 1 pip is your cost compared to 12 on the other ones. Okay, which are the indices. Okay, you with me? All right. Too much of this nonsense here. Sorry. Get rid of it. And clutter your charts. Okay. I'll go back to the daily. A straddle trade. Just before we close at 11 o'clock, for newer guys who want to join, they've got some bucks in the account, I want to make use of the fundamental coming out 3:30. Okay. Number one, what's going to happen? Don't know. What's like to happen? Don't know. There's no such thing as a no-brainer. There's going to be anything could happen. But there is a way where we could, if it works out, take advantage, quick advantage on that particular fundamental that comes out because it tends to drive the market. So I think it's about 200, 205 or whatever. The expected jobs being created over the last month or so. If it's higher, that will be considered inflationary. If it's lower, it will be considered deflationary. If it's lower, and how much lower we don't know, should weaken the dollar. If it's higher, we should strengthen it. If it's a lot higher, it should strengthen it even more. We don't know. So what we're going to do is we're going to put above the market a buy and below the market a sell. So if it comes out in favor of the dollar, which will weaken the euro, and that's complicating matters because dollar strength, euro weakness, the base comes the euro. If it comes in favor of the dollar, that should come off. If the dollar, if it gets below the expectation, the likelihood it will weaken the dollar and it will shoot up. I know it sounds back to front, which is not the dollar euro, it's a euro dollar. Remember that. Okay, so I'm saying 10 pips. If you're battling to put the trade in just before 3:30, you've got to have the trade in there, maybe use 50 pips, well, sorry, 5 pips above or below the market. But whatever you do, you must have those place trades before the market opens, and you mustn't place the trades more than 3-4 minutes before the market, before the release of the data, in case some movement fills either your buy stop or your sell stop. That's the last thing you want. Are you with me? If you place it in an hour before, 10 pips above that and 10 pips below it, and the movement takes you in, that's when you don't want to be in the market at all. You want to have 2 pending trades not in the market until 3:30 when the data is released. Hope you got that concept. Okay. I'm nearly finishing. If everyone knows that, unless you have a brilliant trade, you want to do that, not a problem. It's for guys, I'd like to see who can actually join me to see we make a quick buck out of it. So what we're going to do is we're going to go to, where is it? Euro dollar. Double click. And we're going to put not a market execution, not going to market, we're going in a pending. Don't forget that's no good to you. You go for a buy stop. Right. What is the volume? 80 bucks a micro. Okay. So if you can afford to risk 80 rand, you put in 1. If you can afford to risk 400 rand, you put in 5. 5 micros, that is. No, I'm talking through it now. I want those who are in the trading room to be on it. There'll be newer guys coming in and I'll talk them through it. But hopefully you'll be ahead of them. That's why I'm doing it now. I don't want to go through all the mechanics 50 times before opening because I can't. The time is not there. I want you, Vicky and guys, that's why I'm doing it now, to get the concept. So you're going to start yawning when I explain to the other guys who are joining later on. I want you by that time to be on it. Anna Marie knows exactly what I mean. This is not an example. I'm trying to teach you the mechanics of what's going to happen later on. This is showing you the mechanics. It's nothing to do with doing a trade at the moment. Nothing. Trying to get through the concept and mechanics of how the trade's going to work. If you can't grasp that, don't do the trade. Okay. Brilliant, Ken. I love you. Brilliant. Can you imagine 29 minutes past 3 and 59 seconds, bang, load shedding? Oh my goodness. Yeah. Your evil sense of humor is worse than mine, Mr. Ken. Brilliant. Yeah. Yeah. Get your knees and pray on that one. This is showing the mechanics of the trade. Pending order. Now, you've worked it out. You want to risk, I don't know, 240 Rand plus minus, 250, 220. Round about 240 Rand, 80 Rand a micro. You'll put in, sorry, wrong way around, 3. Okay. You've got to work that out. I can't do that for you. You know what your better is. 80 Rand micro. You then put in the volume commensurate with that. Okay. Then you put the price on the buy stop, not 10 pips above this one, 10 pips above that one. What's that? 105.97 will be there for 1.0607. Got it? Then you place the trade. Bang. Now you get a pending order. Then you go, do this for 3 minutes. You're going to be on it. You make sure that is the volume that you've worked out correct. Sorry, do your pending order, don't forget. Means next, rather get it right, I jumped it there. A sell stop pending order, and you're going to put in whatever. I'm using that as an example, and you're going to put a price in 10 pips below 1.0584. Click the place. You've got 2 pending orders now, one above, one below. Why I say 22 or 3 minutes before half past, not 10 minutes before? Because one of them in the movements up and down might fill one. We don't want any of those 2 placed orders to be filled before 3:30. Are you with me? Good stuff, Peter. No, this is serious now. Have you got the concept? Now, what happens? The figures are released. You get a whiplash, anything could happen. But let's say it goes in the favor of the upside. First thing you do is you get rid of your opposite order. You get rid of the sell stop. Quite frankly, it's quite simple. Just go to volume, double click, and then delete it. Or right click or whatever. I don't try to do that. I'm assuming if you want to trade the market, it's going to operate the platform. Delete if you're going up, delete the down one. You get my point. I can't simplify it more than that. You've got to get that basic reason. Second, bit of noise coming in. So if the sell stop kicks in, you delete the buy stop. The buy stop kicks in, you delete the sell stop. And it goes up. That's deleted. Now, as Anna Marie is quite right, it can move. You've got to be on it. It can move quickly. She didn't have time to start faffing around putting in stop losses. You don't put a stop loss in this trade at this stage. You just put a buy, sell order. Never mind what stop loss, irrelevant. TPs you ignore. It's not a buy trade or sell trade. It's a potential trade. One or the other will be filled in a profitable nature. Now, if it's going so quickly, you haven't got time to start faffing around putting a stop loss to protect you. So therefore, you can go to your volumes and double click, and a box will come up, and that yellow bar will be there. If you get nervous, you can close it. If it goes up, comes off, it goes up again, hold on. Don't take it too quickly. I can't make that call. I don't know what the movement's going to be like. Okay, but be on top of it. Do not sit there twiddling your thumbs. Here's a good example. Look at this candle here. Twiddling your thumb, it shoots up there. What do I do now? Maybe you can ask Roger. Maybe you can ask him to make that. Make a quick phone call. This can come down, and your profitable trade will turn out to nothing. You know what I mean? You've got to be on it, and you've got to think on your feet. Just continuing up, fantastic. Get out, or you might want to partially close. You've got 5 micros. You might want to double click, put in the volume of 0.02, close those 2, let the other 3 run, whatever. This is where you've got to know what you're doing, whether you're going to be on it. But the concept is it's going to be quick, and that's how it works. And to maximize that. And you will get a situation, if it does go in your favor, down or up, where you might get out too quickly from nerves or fear or jumping around. That's fair enough. As long as you come up with a profit, With practice, more understanding, you'll do it again. We're doing another one on Tuesday, the CPI. We'll do another one next month on the non-farms again. Another one next month, the CPI again. And suddenly it'll be like changing gear. You're doing it automatically. Okay. I can't tell. There's no picture. I don't know. It depends what the market does. You've got to think and watch what's happening. There's no set. There's nothing set in this. It's an art, not a science. Not to say 2 and 2 is 4. It might shoot up there. It might shoot down there. I'll use that because there's not much room on the chart here. Shoot up there, come off a bit. You panic, get out, and then shoots up, and you wish you're on board a bit. That is something you've got to try and do. All I ask you, if it does shoot in your favor, make sure you don't take a loss on it. Pips, not points. I said points. Thanks for correcting me. I don't mean points, I mean pips. We're not interested in points, we're interested in pips. 10 pip points, 1 pip. And all the points with pips. Okay. And nothing could happen as well. It could be a damp squib. Bottom line is we don't know, but we can take advantage of a major fundamental coming out and the world reaction to it by sort of placing a bet above and below. And if it does react in one direction, we're on board. You get the idea. We don't want to preempt and say, I'm going to buy this, and it comes off. I'm selling it, goes up. We can have a buy it and sell it in there to see what happens. Well, it's complete pot luck. It's absolute pot luck. Why is it pot luck, Pietro? It's not whether the figures there, we guess there or whatever. It's market reaction. Remember I mentioned earlier on, Pietro? Ask yourself what mood you're going to be when you wake up tomorrow morning. I promise you, your wife doesn't know. I don't know. You don't bloody know. You don't know. So we're going to say, all right, if you wake up in a good mood, we want to be on board, have a great day. In a bad mood, we want to be on board, have a lousy day. We don't know. How it will react, as you quite rightly said there, it could be a damp squib. We do not know. So there's no guarantees whatsoever, but we work on the high probability that we can make good Tom out of it compared to the risk involved. Okay. You know, you're risking 9 to make 18. Here you're risking 9 to maybe make 30 or 40. And if it works out, which it has done many times, it can be a bit of a windfall going to the weekend. Number one. Number two, put a smile on your face. Number three, say, well, that's all right. I'll do it again and again and again. You get the idea. But again, basically, I understand this. Try not to grasp on a no-brainer absolute. Try not to do that. I don't care what brilliant strategy you come up or what you saw on YouTube, where this is going to go in the next hour. Not a single human being on the planet knows that. Maybe the deity knows, but that's the only one that knows. We do not know. We take a theory, or we take a strategy through the technicals and the fundamentals to say we're going to buy or sell it, but that's why I have a stop loss. We don't know, but we get with experience getting the slight odds on our side. Okay. If you're looking for a 100% yes or no, put your money in the bank and earn your 5 or 6% per year. And remember, that's not enough money. Well, you can't earn money without taking some sort of risk. It's like a trade-off. I want, but I don't want to give. It doesn't work. Got to give something to get. And this is why I think you can give a little bit and get quite a lot with this particular strategy. It's been done before, and with a bit of practice and head's right, and you feel more comfortable, you've done it a few times, like driving a car, you'll get better at it. But don't do it unless you're on it. And don't, right in the middle of the movement, start asking me explanations. I won't be able to gabble it quick enough for the market if it happens that way. I don't know if it's the correct one. I call it a straddle. S-T-R-A-W-D-M-E. I call it a straddle trade. Well, that's the correct terminology. I don't know. I quite like it. You're straddling the market. But never mind the fancy name or the unfancy name. Anybody there not got the concept of it? Because I think it's important you do, because it can be, quite frankly, a quick, easy buck if you get the idea. Which we all guarantee. I don't care who you are, we're all looking for that. Hey. Okay, you can do the NAS, Alwandi. You can do it. Just bear in mind that if you haven't got the micro, you're doing on the normal one, make sure you got Tom. Okay. I haven't got time now to explain the difference. The contract is a big difference. The contract value on the normal NAS is 10, on the micro is 1. So rather do it on the 1, you can always go in a bigger position because you can go bigger, but on the 10, you can't go lower than 0.01, if you know what I mean. Don't forget the NAS with pleasure, it moves quicker, but the costs are higher. Look at the spread on this, it's about a pip. On the NAS, it's 12. Just bear that in mind. You can't use 10 pips above and below on the NAS. You've got to use about 25 because the 12 pip costs involved. Yeah, Tom B, but I'm pretty sure you will. I haven't met you, but I get the impression that you got your feet in the ground. I think you will. The fact you're honest with yourself on it means that most problems come to the world we lie to ourselves. No, I'm confident, yeah. You're trading CFDs. I wouldn't do a CFD on it. But they're all CFDs. It's over the counter. It's not an exchange. But we usually refer to CFDs mean shares. Don't worry about shares. I suggest you do euro dollar. If you want to do the NAS, fine, but we've got to have a wider, say 25 pips above and below because of the costs involved. It's made up though if you do, because it tends to move quicker. Like a Ferrari moves quicker, but it costs more than a Volkswagen. Okay, any questions? If you haven't got a clue, we'll try again at 3 or just before I'm over at 2:45. You can come in on board as well. But please, I don't want to be rude here. If you're going on a demo or whatever, don't waste our time. We'll try and get people on there because there's a limited amount of people come on there. And maybe we'll leave somebody out who wants to trade with real money because somebody's taking a place on the demo. Make sure you got the concept, got the money on a live, and actually wish to do it. Okay. We can discuss theory in the trading room. That's for doing it later on. Leave the dollar alone for the moment. I'm looking to short it, but not right now. If you want to do a straddle trade on this, you can, but look, it's a 4 pip spread, just bear that in mind. So you need a 15 pip above and below what the Euro 10 will do. Yeah, I want to sell it, but not right now. Leave it alone. It's going to drift a little bit going into 330. Dollar Swiss franc, don't really do. If the dollar could be strong, then before you want to buy it, then you're selling the strongest currency going at the moment. If you think the dollar's going to be weak, fair enough, then you sell the dollar and buy the Swiss franc, no problem. But we don't know what the dollar's going to do, so it's almost certainly going to drift. It's going to drift because the guys out there are waiting for this very, very big, important economic data release at 3:30. Okay, are you all with me? Might come quick and fast and flying at the moment, but with repetition, it'll start to fall into place. Again, always think, first lesson driving, you're stored in the car. After a while, you're going to have a chat. Be on your cell phone and still change gear without even thinking about it. It depends on the speed. Ken, you're a little bit quick. You can trade a little bit longer. The speed without making a mistake of placing the straddle trade. If you can do it in 2 minutes, do it 2 and before. It takes you 3-4 minutes, place it 3-4. You don't want to go in with a sell limit and a buy stop or market on 1 and whatever. As long as you've got the concept, what needs to be done, and it takes you a minute to do it and a minute before, rather maybe 2 minutes just to make sure. All I'm asking, not too long before, because we don't want one of those pending trades to be filled before the data comes out. If you have any worries about it, put it 15 instead of 10 pips on the euro dollar above. We don't want to be filled before it comes out, and then it's up to you and your own particular speed and ability to put in the correct straddle trade order. If it takes you long because you're fiddling around, maybe start a little bit earlier. But if you start too early, one of them might get filled. Now, I get that, Ken, but I'm saying what you just said. Are you with me, Ken? It takes you 2 minutes, do it 2 minutes before, make it 3 minutes before, add a minute on. If it takes a little bit longer, but not outside 5 minutes. one of those might get filled. Unlikely, but if you still need more than 5 minutes to place the trade, rather use 15 above and below. If it works well, you lose 5 pips of profit, but rather do that and get half the trade in or put a wrong trade in. Make sure when you enter it, buy stop, sell stop, the right volumes, and neither of them are filled, because it will be moving not very much beforehand. Have you got it? Before we close off, anybody not got that? We'll go it again, but the time is Fugit coming up later on this afternoon. That's why we're more relaxed now. We've got the time to do the theory and without the stress involved. And Tommy, you're a star. Did you see what she just said there? Don't place it. Live them doesn't really matter. Use the live, keep it on there. Place above, place below. Try it again, knock it off. Tilt exactly. Practice. You don't have to place the damn trade. Just dump, just go to it. Actually, I rather like that. It's brilliant. Euro dollars. That's a brilliant suggestion, guys. As long as you got the concept, then it's just practice. Number crunching practice. If you haven't got the concept, well, I don't know how else to put it. Get your volumes, go to your market execution and buy stop, place the order, don't press the place, do it again on the sell stop, knock it off, do it again until it clicks into place, so you're more rapid. You can do the racing change going back to the number. Your worry times came. What the hell have we been talking about the last hour? Yes, 3 till 4, 3:30 opening. So we're only going to do a trading session Friday afternoon because of non-farm payrolls. Next week we won't. Tuesday, if you do well at this and you get the idea, Tuesday we're going to do it again, but it won't be at normal 4 till 5:30. It's going to be because the clocks are going forward an hour, so the CPR release won't be 3:30, it'll be 2:30. It'll be 1:45, 2 o'clock-ish till 3 o'clock on Tuesday afternoon. Okay. It's in your own interest to do that, because if you've got the track of it and you've got it, it can be profitable, very profitable. Okay, are we all good there, guys? Good stuff. Okay, guys, catch you later.